Mobileye reported earnings last week, and the market was not happy at all with what they saw. The big reason that results were down and actually guidance was down for the back half of the year was because of China. There's a slowdown in the electric vehicle market there. That's really something that we have known. EVs overall, whether you're talking about in the US or in China, have really struggled in 2024. And Mobileye has exposure to a lot of those companies because it's a supplier to a lot of Chinese electric vehicle manufacturers. But there's some good news for the company long term. The backlog is starting to build. The number of projects that they're working on that could result in billions of dollars in revenue years from now are starting to take hold. And this is one of these companies that the work that they're doing now is really only going to pay off 2, 3, 4 years in the future when these vehicles and products actually start to get off the line. So I want to go through the results today and on also some comments that management made from the conference call, because I think it kind of puts into context what the company is building. The vision here for Mobileye, if you're an investor in Mobileye, is that this is the software layer, the autonomous software layer for multiple auto manufacturers. So it's called a horizontal services company. They're going to make a piece of software that dozens of different vehicles could attach themselves to. They're not going to be vertically integrated like a company like Tesla, where if you want Tesla software, you got to buy a Tesla vehicle. They're going to be horizontal, meaning they're not going to make the cars, but they're going to try to sell to every single company who makes cars. So this is basically the Android versus Tesla building iOS. That's kind of the way to think about it. But I'll dig into some of that strategy today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to some of the results and then what investors were disappointed by. This is a look at the earnings release. Again, this came out August 1st. So a few days ago, revenue was down 3% year over year to $439 million and up 84% from a quarter ago. Now, you may remember a quarter ago is when there was a ton of inventory challenges for Mobileye. So basically, their customers bought much more product than they needed from Mobileye. Basically, they were stockpiling coming out of the pandemic. And then they cut back on all those orders in the first quarter, and that kind of all hit at once. So management has done a lot of work, talked on the last conference call about how they were working through that inventory. Seems to they have gotten to a more normal position today. You can see some of the margin numbers here. Gross profit, $209 million. That was down a little bit from a year ago. And that margin, 48%. Operating loss, $94 million, and a net loss of $86 million. So not a huge surprise that Mobileye is losing money given where it is in its development cycle. This is a growth company investing ahead of the potential revenue in the business on a non-GAAP basis. And this is oftentimes what analysts are going to compare themselves to. They were profitable with 9 cents per share in earnings. But here's where you get to guidance. And this is really what the focus was from a market reaction standpoint. Previously, management had expected $1.83 to $1.96 billion in revenue and operating income, adjusted operating income of $270 to $360 million. So solidly profitable on right around $1.9 billion in revenue. Now they expect to see 1.6 to 1.68 billion in revenue. So a drop of about $250 million or so, and adjusted operating income, $152 to $201 million. What in the world is going on there? This is the big thing right here. This is comments from the CEO. We face 3 unexpected factors. Number 1, global production forecasts have weakened, which have disproportionately impacted our core customers due primarily to continued share losses in China. So their customers are losing share in China. Number 2, they've seen declines in orders in the second half of 2024 from Chinese OEMs compared to what these customers were indicating as of our last update. And number 3, a delay in high volume ADAS launches outside of China is also a meaningful headwind, although smaller than the first 2. So what exactly does that mean? ADAS is the lowest end system that Mobileye sells. This is a camera that's going to be able to offer basic features like how far is the vehicle in front of me. So not really advanced. This is where the company is expecting to grow in the future: supervision and chauffeur, even drive, which is full autonomy. But this is where there was weakness, particularly in the China market. They talked a lot about that. There's a lot of competition in the China market, maybe not as high quality as Mobileye, but that's the competition that they have to deal with in that market. And then obviously you have some delays in some of the more Western companies launching as well. But along those lines, they did make this announcement with Zeekr. Zeekr is owned by the company that also owns Volvo, but this is a Chinese manufacturer, so one of their bigger wins in the market. And they are going to plan to accelerate technology localization in China, integrate Mobileye technologies and next generation Zeekr models. And that is going to include supervision platform. This is the kind of technology that's rolling out more and more in China with a lot of different models. So companies have to keep up. Either you're going to develop that kind of technology in-house, or you're going to outsource it to a company like Mobileye. That is their business model. And one of their arguments is, hey, there's way too many companies developing this technology in-house. It's not good enough and it's not profitable for these manufacturers. So we're going to be sitting here waiting to offer this solution at a much more cost-effective solution for them. This is one of these things that is also consistent in China, is a locally tailored or locally developed products. So they're going to local tailor other Mobileye technologies, such as the driver experience platform that will allow Zeekr to go from level 2+ through level 4 autonomous driving. So there's bad news in China right now, maybe a little bit of growth being developed with partnerships like Zeekr, and potentially if the market recovers and some of these Western OEMs start to expand as well. But I think the other key for Mobileye, if you're investing in this company, think about it more like a decade or 2-decade investment. Are they winning where it counts with other auto manufacturers? We got some relatively positive news there as well. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. But I mentioned that if you're invested in Mobileye, it's not just about one quarter that really matters. It's about how much are they going to grow long term over the next generation of vehicles that are going to be launched. And so that's why these comments stuck out to me. And I'm just going to go through this whole highlighted section. The RFQ volumes are very high. We are currently already responding to 4 RFQs representing over 19 million future units supported with a single IQ6 with a price that's approximately 4 times our current average sale price and with similar gross margins to the company average. So about that 50% gross margin. To put this into context, the life revenue value of these RFQs from just 4 OEMs is already about double the value of all combined ADAS RFQs we're currently pursuing with more than 70 OEMs. On supervision and chauffeur specifically, we have made substantial progress across many pre-development engagements, and we believe we are on track for major design wins by the end of 2024 and a strong pipeline in 2025. So the vehicles that are going to be built in 2026, 2027 are being developed right now. So they're designing features into those products right now, like supervision, like chauffeur. What sort of technology are you going to be offering? You're making those decisions today. And so what Mobileye is telling us is there are major OEMs, 4 major OEMs in particular, that are looking at much higher end systems, potentially something that could be capable of doing supervision or even chauffeur. And those are wins that they may have in 2024 or maybe even early in 2025. So the goal there is not only to increase the volume, so the units you're actually integrating Mobileye's technology into, but actually increase the average sale price as well. So it's kind of a double whammy from a revenue growth perspective. Now, we don't have those wins yet, but this is one of those things where the stock drops because the quarter was really bad and the next couple of quarters are going to be weak based on these Chinese results and trends that are going on in China. So no real surprises there. But what management is also telling us is that the future is getting brighter because there is more interest in some of these higher end technologies, these higher sale price products. And that's ultimately where I think the value lies. So this is a stock that I recently bought for the first time. It's in the asymmetric portfolio, and it's one that I may add in the future ahead of potentially getting these design wins, because that's really when the stock is going to take off, is when it's a little bit more clear what the revenue future for the company is. But I don't think things are as bad as the market thought they were from the second quarter of 2024. 2025, 2026 still looks pretty strong. That's my take on earnings. But what do you think about Mobileye? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.